Well, music royalties are an attractive asset class as they are uncorrelated assets against traditional assets. This is substantiated when we look at the data of the publicly listed music royalty companies as indicative of the music royalty industry. Furthermore, the growth and resilience of the music royalty industry has given a positive return and alpha to investors. When we look at the trend going on through now, there's a lot of nostalgia, and as such, there's been generating a lot of downloads, streaming, revenues from these back catalogs, and likewise sales or investment opportunities. I think the top factors preventing investment in music assets would be the lack of investor knowledge and perception of what would appear to be a complicated industry. In the minds of some investors, it is believed to be a niche asset class and driven by fads. Truth be told, the music industry or music royalty industry can be analyzed in the same way as traditional assets that either take on a value or earnings momentum approach. In terms of post-investment management, there's actually a lot of data, especially from streaming platforms, in terms of the interest levels and also the levels of revenues that are generated. And frankly speaking, in terms of the various revenue streams, the physical sales has been dwarfed relative to streaming. Now it's not about ownership, now it's about access. And streaming allows access across all geographies, across all genres, and across all ages. I think the success factors for the opportunity will depend on the investment philosophy. In our case, we look at existing assets that could be tired and see how we can reposition them to extract more royalty income and hence alpha. This is no different from buying an old building and repositioning it. The flip side is investing in, say, 1,000 new artists and, say, 900 bomb out. Of the remaining 100 artists, 50 break even, 30 do well, and 20 become your unicorns. This is a VC model. When it comes to the success of these music assets, they are relatively immune to geopolitical risk and also supply chain risk. And frankly speaking, because we look at existing or mature assets or pieces of music, geopolitical and supply chain risk doesn't come into play. Technology has allowed music to reach the masses in a very affordable manner. Surveillance and copyright protection have also reached new levels protecting intellectual property owners and hence reduce slippage and losses to theft and counterfeit. The availability of platforms and technology have fueled growth in music streaming, and it is now the largest driver of growth in the music industry. The recent COVID pandemic has also accelerated adoption of streaming and technology. The fastest growing subsector was actually the silver surfers. I would look at it from a developed market versus an emerging market perspective. The largest markets by dollar value are in your developed markets, but growth will come from developing markets like Asia Pacific, Middle East, North America, and Latin America. Large populations, rising disposable incomes, and rapid adoption of technology will fuel growth and hence investment opportunities and investments. Definitely it's 5G and the metaverse. 5G allows more bandwidth and allows more participation and complexities and allows basically concerts to go into your living room. And the metaverse allows you to be in that concert. It's an exciting and new frontier. And what we've seen, in the last 2 years, we've seen a rise of concerts in the metaverse. Things like Travis Scott and even Ariana Grande. And these artists are embedding the songs and also part of the metaverse, even in video games. I think the Fixed Income Leaders Summit is a very interesting summit as it gives us an opportunity to be with like-minded professional investors to bounce and share ideas and subsequently opportunities.